When U.S. President Barack Obama signed the Dodd-Frank bill into law, he promised the new regulation would change the way Wall Street does business.
In the end, our financial system only works, our market is only free when there are clear rules and basic safeguards.
The ultimate goal was to prevent a repeat of the global financial crisis and a bailout of the banks. But 6 years later, many U.S. banks are still too big to fail. Experts say their collapse would pose a systemic risk to the global economy. But according to Columbia law professor John Coffey, Dodd-Frank has made it less likely the banks will fail.
The Federal Reserve has pushed strong capital requirements. They've required banks to get out of riskier fields, and banks no longer own hedge funds, banks no longer invest in stocks, and they're no longer trading some more of the more exotic securities.
Prohibiting banks from taking risky bets and requiring them to have a bigger cushion if they run into trouble has made U.S. banks less profitable. As a result, the industry has been shrinking. It has also become harder for people to get loans. Some worry the changes make U.S. banks less competitive globally.
So basically, American banks are not going to be in a position, 10 years from now to support the activities of multinational American companies, while banks in other countries are going to have that capability. The American banks have got to get bigger.
Whether you agree or disagree with that statement, Coffey believes Dodd-Frank's fate lies in the hands of the next U.S. president.
Dodd-Frank's survival depends on the outcome of the current presidential election. If Donald Trump is elected president, Dodd-Frank will be repealed probably within a year.
Industry lobbyists and many Republican congressmen pushed hard against the Dodd-Frank financial reform bill throughout its implementation. If Trump, the Republican nominee, were to take control of the White House, the bill would lose a powerful ally. And analysts say Wall Street could go back to doing business like it did before the financial crisis. Karina, CCTV, New York.